Well, good evening. I'm Epstein with your SPDR-ETF stock market wrap-up, and this wrap-up is for Tuesday, the 26th of March, 2024. Now, remember, Good Friday's coming at us. The markets will not be open. You will get a lot of data. You're going to get PCE, core PCE. The market's going to look at that. It's one of the Fed's favorite tools. Is it going to be 2.8%, 3%? Don't know. We'll see how the market reacts. And we have to understand, it's taken off the old data. We've already known that we had hot PPI and CPI in January and February. So those are things that the market will take into account regardless of how the number comes out. My point being with this, that we have to, if you're going to get a June cut, as the market seems to think you're going to get, you're going to have to start getting weak data for March, certainly a lot of weak data for April and May. If you don't get that, why would the Fed even consider a move? They won't. So the market is booking in that we're going to get that in one way. If you look at the Fed watch page, other parts of the market, I'm just not seeing that. I mean, I look at the different Fed members and there's no rush. The data hasn't come in weak. So you're betting it'll come in weak, but it hasn't done it yet. So be careful here, all right? That's my point. You can see we're down again in the stock indices. The question is the market going to finish out the month on a strong or a weak or no? Don't know yet. A lot of time to go. If you take a look at things, though, and you see where you're at in it, Fisker, I think I mentioned, if I didn't talk to you about it, they're going to be delisted from the New York Stock Exchange, probably another bankrupt car company. We've seen a number of them come and go already, the new ones. They don't seem to be doing that yet in China. They're still quite strong there. We saw today that Tesla was a little bit better, and you gave up ground again in those 960 range is a hard number for NVIDIA. That doesn't mean it's turning bearish, but if you look at the chart, you see the Bollinger Band tops, you see where it's at. That is your resistance point in the marketplace. Amazon also gave up a bit today. The range wasn't too big, $2.50. I didn't see anything big time there. Home Depot down a little bit, $3.50. That's not the best thing you could do. Uber giving up a little bit. And I'm looking at the show lineup for AMC, and I just don't see anything that good. I really don't think the King Kong movie is going to be the big savior. I could be surprised. I love the series, but I have my doubts about it, all right? And Dune didn't do the job. The market didn't move out of the low $4 area. So as good as the movie I hear is, it didn't do the job for the movie at this point in time for the movie screens. Gold did hold up today, both in the miners and here, but copper gave up ground. And remember, we're hearing Goldman come out, oh, you got to own copper market this year, gold markets, where the investors going to be. The investors also going to be one other area they were talking, that the investor would be, and I'm thinking out loud here to myself, they're going to be in energies. And energies today were slipping back a little. So let's look at FCX right here. This is Freeport. And as you can see, it's got a trading top that it's forming right now. When I look at the market, you have a higher high and a lower low pattern. It's not in a trend at this point. This is a distribution pattern so far. Next time it gets up through these highs at the 45, 46 level, that could be where the market decides, okay, maybe it's going to take off again. It ran for a while against the upper Bollinger Band, got to the right-hand side, and now, as I say, you're starting to get that funny distribution panel in the market. Schlumberger, it's, I think, going to fight right here at the 200-day average to the upper Bollinger Band. If it sinks under it, then you come back down over here. Keep your eye on momentum. If the red line closes under 79 tomorrow, could be a problem for the market. As long as it stays above that, I think the battleground stays, as I said, with bullishness to it. So now in DraftKings, all right, my goal when I first brought it up 2 weeks ago was before the March Madness. The market was about here. And I said, I think you're going to get a rally in it. And that's when the betting should happen. So we won't see the results of the betting, as you know, until the quarter ends. But I think the pros are going to do some profit taking here. You don't wait for the result. You already can see the market has moved from 42 to the 48 level. And I think that there's some profit taking by the pros going on. I am not bearish, but I would if I had told you, hey, I want you in this market, I'd be telling you that's exactly what I'm seeing. I was surprised at gasoline. Now, you didn't lose the embedded reading. You're going to lose it, I think, right on the opening tomorrow. And then the question is, does the market come roaring back for you or not? I think you'll lose it intraday. And if it stays lost, you're probably going back here to 68.84. Yesterday, a big article by the AAA, and that's the American Auto Association. And to make a long story short, they're looking for $4 gasoline plus this summer. You're about $3.54 nationwide right now. So they're looking for upwards 15%, something in that range. And the question, of course, to the market is, they've already said that. Goldman has said that they're looking for higher energy prices. They're looking for higher copper and gold. And the market, too many people on the long side doing a washout. That's what I think is going on. In XLF, the momentum here is lost. You have a market that's in an uptrend, but the momentum to the upside is lost. And you're drifting at this point in time. I'd be very cautious with it right here. In the industrial sector, now, every time I look at these sets of industrial numbers, I'm just not seeing anything. Richmond, Fed, whatever it is, it's not strong. And yet, the chart action had been good. Now, you lost the bullish embedded reading. You did go down and challenge the Bollinger Band. We came up, got overbought, and we're coming down again. The overall trend is up, but you can't buy this market from the looks of the chart on rallies. You got to wait for challenges back here towards the 18-day average to take another look-see, in my opinion. The Chicago Merc failed. Do you remember when we were here last week? And I said, this is a big failure. They had just filed at this point in time to go for the Treasury, cash Treasury deal. And if they were going to go, they had to get over this high that I've got right there. And instead, they came out the low. Game over. And that's exactly what's happened. I would expect to see some short covering because I think the pros are short in this 211.43 to 211.72 area, the Bollinger Band and the 100-week average, because you're oversold. But the chart stinks. In RSPD, what we have here is a market that still has the consumer fairly strong, but the momentum's working against the market. It gets up at these Bollinger Bands, gives you the sell-offs, and that's what you got to be a bit careful of. As long as it stays over 49.69, I think the market stays in relatively good shape, but I don't see a reason to go into it. That's been the problem. In the home builders, well, you have a marketplace that you got to pay close attention to right now. You started to lose the embedded reading. So let's look and see. You can't count today. Were both numbers over 80 on Monday? Oh, yeah. Were both numbers over 80 the day before? Yeah. What do you think Thursday was? Means you don't have it. You just have an overbought market that might want to correct a bit, but I think you have good support in the market back at the 106.30 area, and that's where I think the pros are laying in the woods, waiting to see if they can get the market away from an overbought condition. I think they'll take a hard look at that number. In the energy sector, you still have the embedded reading. Now remember, XLE is made up of how the profits are going to be in all the refineries, the big boys, and the drillers. So you want to pay attention to that. It still looks bullish to me. I think the pros will continue to buy this on breaks. In GLD, you lost the bullish momentum here, right there. And it's been hard to want to be long since that occurred. I can make the argument the market wants to go back to the 18-day average to figure out what it wants to do. The bias is certainly to the upside. It just doesn't have a punch yet. Silver, on the other hand, is actually turned down in the trend. Lower highs, lower lows under the 18-day average of closes. This market has room to slip a bit more here. If it wanted to let go, I could see the 2140 area being the next zone. In the copper market, you lost the bullish embedded reading. So unless you're going to just make a move right over these highs, which I don't see the reason why, I can make an argument that price and the 18-day average will come together. It'll be higher than 39.42 because that number is going to jump tomorrow. The number's jumping each day, as you can see. About 26 cents. Day before, it should have been, about 26 cents a day. So you can figure around the 39.70 level, something in there. I'm looking for the support to come in, but that's not a reason to buy. You have the momentum of the swing line down. The bias is up, just not a pretty chart right here. I don't see anything in TLT getting a bad quote. UUP, we've got higher lows, higher highs, not much I can do with that. FXC, you can still see how the market is pointing down here. And the euro, well, there's a lot of talk by a lot of people that they want to see in June a rate cut. Rate cuts are not considered friendly right now because the U.S. is thinking of holding firm. If the U.S. hold firms, what happens is if you cut your currency comes under selling pressure. I talk about all this and a heck of a lot more each morning when I teach. Now, in my morning Spider ETF video, first of all, the way I do it is so simple. You'll see the graphs, and then on the computer screen, there's going to be a slide bar when you're on our website. So you can jump in each of the areas. Let's assume you're in an area, BND, all right, TLT. Let's assume you want to be in the metals. Let's assume individual stocks. As you slide it, it tells you the area that you're in so you can quickly get where you want to go. And I'm always rotating for you the different things we do. So these will change all the time. I'm not even covering jets right now. It'll change back and forth all the time. You write me. A lot of people do. I'll mix things in for you. That's how we got FXC just coming up. Had one of you write me and say, hey, Ira, can you cover Freeport? I said, I haven't covered that in a while. Why not? So this is what we do. But in the morning, it's more set. And I cover the things that I think are super important. When you have something as a subscriber of mine, you write me, and I will create a short 30 to 1 minute video for you, 30 second and 1 minute, and answer your question as we're talking over the chart. I devote a certain amount of time each day if people want that of me. So that works out pretty neat. A lot of people do like that. Each Saturday, I'm putting out the weekly charts. And the reason I do it then is it gives you a chance to look at it over the weekend, see where we're at. I might do it earlier this week because Good Friday, we're not open, so I might do it Thursday or Friday. We'll take a look. But you're going to get the ideas for somebody that's been doing this a heck of a long time, the chart action, what I'm seeing in the chart, why I'm seeing it where I am. I will be wrong, so do not think I walk on water. I do not walk on water. I will be right. I'm not going to be wrong all the time. And I think I'll be more right than wrong with any luck over the course of my career. And that seems to be how it's worked out. Otherwise, I don't think I'd still be here. But that's what it's about. And I do talk long-term and short-term. Now, the only reason a day trade could happen is you come in and the market hits your objective, or you come in and you're stopped out. Barring that, I'm looking for swing trades, which can last anywhere from a day to a week, and longer term. I'm still in trades from December of last year that I put in, not this year, last year, that we put in the video. So we came into that a while back. So I cover all this, and every trade recommendation is followed up in the video for you. So from start to finish, win, lose, draw, they're all there. And that's what you want to do. Go to IraEpstein.com under the word research. It's all there for you, or you can click right up here and that'll take care of it as well. I'm Ira. You have yourself a good day, and I will catch up with you all tomorrow.